When is it smart to take a loss in the stock? It's always smart to take a loss in the stock when you keep that loss small. Now, this is a typical trade that we do. Here you had a nice double bottom formation put in. We got long of the stock. It did rally. However, it began to break down. We set our stop loss point and we got out. When is it smart? You don't feel all that good when you take that loss because, wow, I'm out a couple of bucks here. However, when you fast forward and you look at the stock that you could buy now at a 30% discount from where you got stopped out at, you know what? You look pretty smart. That's when it's smart to take a loss when you begin to buy back in. And that's what we're looking to do with Zynga, ZNGA. They're hiring new people, going into different markets, online gambling. They have a brand. Many people, as many people know about Facebook, know about Zynga. This is a brand. So I like Zynga for the fact that you're going to have one of the very few names in online gaming that is a well-known Main Street brand and big fat margins in that business. So I like the fact that it had a nice key reversal off of bad earnings report released on Thursday. It gapped down, reversed off the bottom, big capitulation volume on Friday. I'm going to drill down to that 30-minute chart in a minute, and then we want to take a look at the short interest. I will be sending out alerts to members on this trade, so have no fears. I will be sending out an alert. Just like I sent out an alert when I first buy and when we got stopped out. Let's take a look at the 30-minute chart. All right, here's your gap down, support at $2.21. Beautiful rally off the lows. Here, you had either shorts covering or you had institutions begin to buy back in. My guess was more shorts covering. You want to get your institutions in when it comes back down, retest these lows, holds, and then rallies higher. Are we ready just yet to begin to buy Zynga? No, not quite yet. It could take place early this coming week. Okay, let's take a look at the book value of the stock. It's trading at book right now, slightly above it. Book value is $2.46 per share. We're at $2.48. Short interest on the stock is 11.7%. The one concern here I have is that you have a total number of shares short of 18.92 million shares. 3-month average daily volume is almost 19.5 million shares. So this percentage short is somewhat deceiving. So be careful. Don't take too much solace in the fact there's a big short interest in the stock. I do believe that there could be a good short covering rally, just not as big as what you may think. So you still need to use discipline when you're buying up the stock. And if this chart did not teach you that you need discipline when getting into the stock, please, I'm warning you. Be forewarned. Do not go chasing the stock higher. We will look to enter the stock when the risk to reward is in our favor. We thought it was in our favor back here when it was putting in a nice consolidation, double bottom action, began to break down. We exited. So I will be sending out an alert if and when we get long of Zynga.